Traders Corner is brought to you by IG.
Welcome, you're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, last week we were goggling at the state of the US market, hitting new records, and I know that's where you want to start this evening by looking at a comparison between the US market and the European market before we come back home.
Yes, that's right. Just to sketch the picture in terms of the bigger picture and the background that we work with from an international markets perspective, I want to look at the S&P500 and then we'll look at the EuroStoxx50. Just as a sort of a proxy for the broader European region. We've got the S&P 500 chart up on the screen at the moment, and I know we did speak about this last week, but it's worth speaking about it again, just to highlight the fact that the S&P 500 has broken out to new all-time highs. And that break last week above 2120 really was a significant break from a short-term technical point of view. The longer-term previous peak on the S&P 500 was at 2134. But if we're looking at the shorter-term technicals, that break above 2120 was quite a bullish break. And you can see it how it's very clear there how it's broken out through that resistance and it's now pushed on to new highs. Having said that, now the market is very overbought. Have a look at your stochastic oscillator down the bottom there. That is right at the pushing up against the maximum overbought levels that it can be. Okay. And similarly, your RSI, the relative strength index up at the top here, is also quite overbought. So one would think that the possibility of a retracement back to retest that breakout level is quite a real possibility in the near term. So I wouldn't be chasing the S&P 500 here. Let's let it consolidate a bit. Let's see what happens if it pulls back to that area, and if it finds support at 2120, then we can gauge whether this breakout is for real or whether it's a false break.
So is that quite important that it stays above or at 2120, that it doesn't break back below that level? Yeah,
ideally, in a perfect technical world, that what was previously resistance should now act as a support zone on the way back down. Yeah. So if we do see the US markets pulling back, then that 2120 area should act as a support. If that support fails, well, then we would say that maybe this move to the upside has been a false break, in which case then we sort of turn on our possibly bearish goggles again. But for now, I think we've got to look at this and say, well, that's actually a bullish chart as we see it.
What about the European markets? I imagine it's not quite the same.
It's not the same, and this is where I wanted to just draw the parallel, because there's often a degree of correlation between markets these days. But if you have a look at what's happening in Europe versus the US, it's very clear that the US is the favored zone. That's where a lot of the money is flowing to. The European markets are still dawdling along, and this EuroStoxx50 is just a good measure of the broad European equity indices, because it contains 50 of the biggest European stocks within that region. And here we're nowhere near all-time highs at the moment. In fact, there's still a pattern of sort of lower highs evident over here on the EuroStoxx50 for now. There's this major resistance zone up here, which is it's between 2,900 and 2,950, where you can see that highlighted with that yellow band over there. That's the resistance zone. And what's also evident over here is the fact that we've got negative reverse divergence on the stochastic oscillator. So what that means is that our stochastic is now making a higher high. In other words, it's more overbought now on this rally than what it was on the previous rally, yet the market is at a slightly lower level. And ordinarily, we look at that and we deem that to be a potentially bearish setup. And I think it does possibly point to the potential for a move to the downside here. So I think we just need to keep an eye on that at the moment. We've got these two sort of opposing technical views coming from the US and from Europe. Yeah. The US very, very bullish chart structure, this EuroStoxx50 not so much.
And our own market, because of course this is relevant to the trade that you put on for the portfolio just last week.
That's correct, and we'll talk about that trade in a minute. This is the top 40 spot index here that I've got on this chart now. And what's quite evident over here is we go back to January, where we had the market low for the year, and I've pulled in this trend line, which is basically through the closing levels that we saw in January and February, and again recently in June. And when I look at that chart, that says to me that we've actually broken below this upward trend, and now the market's been bumping up against the underside of that previous uptrend. And that previous uptrend now theoretically acts as resistance to any rally. It's also quite notable that this market is running into resistance at this point, which is where the 50-day moving average comes in. And you can see that red line over there, that's the 50-day moving average. And certainly over the last 4 trading days, the market's been really bumping up against that 50-day moving average and struggling to get through it. And now as we sit here today, the market's actually down quite a lot. And the question now is, are we beginning to see a reversal from these upper levels, and are we about to see the market stage a little bit of a pullback? Also, again, what's notable here is the fact that we've got negative reverse divergence on the stochastic as well. That's where, again, your stochastic oscillator is now making a higher high, yet the price of the index itself is making a lower high. And that is pointing to a possibly bearish setup. It could be pointing to a leg to the downside now.
I mean, we had those stats over the past couple of days, the JSE stats indicating how much foreigners have been buying the market, and consistent buyers the last, I think, 29 or 30 days, which is a record. And so we have rallied, and you can see that from July, but we're not at the record levels that the US market is at. And I mean, are there a couple of sort of South Africa specific factors there?
I think the one thing we've got to really remember, particularly when looking at the top 40, is that we have a lot of heavyweight stocks in our index that are dual listed in London. So think about things like BHP Billiton, British American Tobacco, and there are a host of others as well. Old Mutual, etc. But those types of stocks are dual listed in London, and they have, and SAB Miller, of course. I mean, that's the biggest of the dual listeds. And with the pound having weakened so significantly after Brexit, what that's meant is that the rand has become a whole lot stronger against the pound. But now, when you convert those share prices of those dual-listed stocks, which have their primary listings in London, convert them back into rands, and convert them back into rands with a rand that is now 10 or 15% stronger against the pound, well, that weighs on those share prices quite significantly. And that's what you're seeing in the top 40 here. And that's why the top 40 is nowhere close to making new highs at the moment, because the fact that those dual-listed stocks are weighing on the index.
Okay, so last week, Garth, you went long of the market, and it was looking pretty promising. And so what have you done with the fact that the market is now started to wane?
Yes, that's right. So I've actually taken profits on last week's long trade. This is now an hourly graph of the SA40 cash. Now, this is a CFD product that's offered by IG Markets, and this particular one is a 2 rand per point CFD. And so what it means is that every point that the market moves over here, if you've got one contract of it, you effectively make or lose 2 rand for every points move on this cash CFD. Now, what I identified last week was this double bottom down here at about 44,400. And when the market broke up above that downward trend over there, I then took that as my cue to go long, and basically accepting that the double bottom was probably holding at that stage, and therefore I could look to go long and put a stop loss underneath the lowest point of that double bottom. Also bear in mind that I have an option structure in place, which we've discussed on previous shows, where I'm effectively protected against any downside below 45,000. So buying this CFD against the options made sense, because I knew that my downside was protected and I could take advantage of any upside from that 45,000 area and higher. So I went long of 2 of these cash top 40 CFDs at IG Markets, and I went in at a level of 44,820. And my stop loss was 44,400, basically below the bottom of that double bottom area. And I said at the time that I was looking for the market to rally, and I would look to try and hold this trade as long as there was still an uptrend evident and that the market was making higher lows and higher highs. And that's been the case since most of last week. However, today that pattern has now been broken. You can see there's been a lateral area of support here at 46,000, which has been evident over the last 4 trading days, or 4 or 5 trading days, and today we've broken down below that 46,000 area, and that's the first time we've now made a lower low. So I took that as my cue to then cut this trade, to take profits on it. So I sold it out this morning at 45,953, and that means that we've made a profit of 4,532 Rand after all costs are taken into consideration. So not bad. I didn't get the exact bottom or the exact top, but quite honestly, anybody who does that is lucky in this business. You try and take the rump of the moves. And we got What did we get here? About 1,400 points or something like that. Not too bad.
Not too bad, indeed. Money in the kitty, and it all adds up at the end of the day. And what about Mr. Price, Garth? Because that was the other long, so 2 trades. Are you still long of it? Because yesterday the retailers had a bit of a wobble.
They did, but today we're still long of Mr. Price. Look, technically this one's still looking okay. What I'd identified last week was that on the daily chart here, the share price had been bumping up against this resistance at 212 Rand per share, but the fact that we had evidence of higher lows it implied that the buyers were strong at the lower levels, and that once this pattern resolved itself, the likelihood was that it would probably push to the upside, because we could see just from the higher lows that the buyers are clearly the stronger force here. And I took that as my cue to go long. You can see it has broken out above that 212 Rand resistance now, so it's all looking quite good for us. I just want to take a look at the hourly chart of Mr. Price as well, because we based our trade last week off of this hourly chart, so I just want to revisit that again. And there you can see that blue line illustrates the 212 Rand overhead resistance. And last week on the show, I identified this bull flag pattern indicated with those black parallel lines over there. And once we started to break out to the upper end of that bull flag pattern, I took that as a cue to go long, and I put my stop loss underneath 205 Rand, which is basically the bottom of the bull flag structure. It's indicated with that red block over there. Yeah. And I'm looking for a move to 225 Rand here, based on that structure and based on the fact that we've broken out above that 212 Rand resistance. Now you can see the share price is still trading quite nicely above the resistance. It's kind of consolidating a bit there on the hourly graph at the moment. But I think whilst it's above 212 Rand, I'm happy to stay long here, and we'll give this a chance to work. I am aware that this is a market where we've seen a lot of false breaks recently, and I'd be frustrated if this is another false break. But you know, you've got to actually put your neck on the line with these things and do the trade as the technicals suggest. If it doesn't work, you know what, we've got a stop loss, and we only had 1% of our capital at risk on this trade. Yeah.
I mean, would you move your stop loss up at all? Because sometimes you can run a trailing stop loss. So
yes.
Just, you know, if you get nervous about what direction the market's headed in, is that something that you might consider?
It's something I might consider. Just looking at this graph, what I would probably do is put a trailing stop loss underneath the 208 Rand over there, because you can see that was sort of a prior swing low on this hourly graph over there at 208 Rand. So I would say to myself, if it comes back underneath the breakout area and it starts to trade beneath 208 Rand, then I probably have to accept that this is a false break, and then I'd rather not be long of the stock. But while it's above 212 for now, I think I'm happy to stay with it.
Guys, just on the issue of conviction, in a sort of tricky market, does it affect you as a trader? So if you're not necessarily utterly convinced of the trade that you've entered into, does it mean that you're sort of a bit more trigger happy on maybe, you know, cutting a particular trade? Yeah,
look, I'm always happy to cut a trade if it's not working. And I think part of good discipline as a trader is to cut your losing trades quickly. When it comes to lack of conviction, though, I think where I struggle more would be on pulling the trigger in terms of entries, because you know, we always strive to try and get 65% of our trades as winners, and I found that difficult this year. I mean, our stats when we reviewed the show a few weeks back showed that we haven't really accomplished that as yet, so not looking fantastic in that respect, and that's where I guess my conviction levels maybe wane a little bit. More on the entry rather than on cutting. I can cut a losing trade in my sleep, but entering in this market sometimes is a bit tricky, because we've been sold a lot of dummies in terms of trades that look good and then they just don't work.
Yeah. Gosh, so what does the portfolio look like then? It must have ticked up quite nicely.
Yeah, we've had a good week. We're sitting with almost 275,000 Rand in the portfolio. So that means we're up just about 10% for the year to date. These are the trades that we've got, recent trades now. We've got obviously our option structure still open in the background that runs out until September. And then we've got that top 40 cash CFD that we closed out this week and made 4,500 Rand there. And then, of course, we've got our Mr. Price long, where we long of 450 CFDs. And that is working for us at the moment. We're up 1,900 Rand on that trade as things stand at the moment. Okay. So it has been a good week. and we continue to plod along.
Yeah, hitting those singles. And Garth, just to end off with, your next course dates are this week.
Yes, this week, the Thursday is the 21st of July. I've got an evening course that's an Understanding CFDs course from 6 p.m. till 8 p.m. in the evening. And then on Saturday, I've got a full day high probability trading course. That's the 23rd of July. Those are both in Johannesburg. So anyone that would like to attend these, please get in touch with me via garth@traderscorner.co.za, and I'll send you all the details.
Great. Garth, we have to leave it there. Thanks as always for joining us. Garth McKenzie is, of course, founder and editor of Traders Corner.
Traders Corner is brought to you by IG.